traders, welcome to the TMT stock market strategy video for Wednesday, March 23rd. Another push up in the markets. They basically shrug off what happened in Brussels, that horrific incident, and markets just bought that dip yet again. Guys, have to be very, very careful here. We are now at extreme levels yet again. Obviously, this is continually happening in this market with the algorithms and the HFTs coming in and just continually looking for probing for offers, and they'll push that market to the extreme level, and we are at extreme levels right now. Yes, I'm going to show you the indexes. We have gone sideways for several days, and then we have popped up and then gone sideways yet again. The price action has been horrific, and to say the least, if you're trading intraday. The thing that I want to mention today, we are coming into a major holiday here in the United States, Good Friday, and when you have a good push up like we've had, you have to be careful for reversals. Why? Meaning that longs, they might want to start taking some profits. The traders and investors that have gotten long at the February low may have wanted to start looking to take profits, and of course the longs that have gotten long back in December of 2015 now are basically whole, probably going to look to take profits. That's how the retail analogy works, right? They buy high and they sell low, and now they're basically at break even. More than likely they're going to sell into that. So I'm looking for reversal sometime today and tomorrow. I'm looking for weakness. Does that turn into a full-blown sell-off? Not sure, but let's get to that point. When it does come, we will make sure that we're watching it very closely, okay? Stocks above the 50-day moving average right in front of you right here, 94%. That means 94% of the S&P is above the 50-day moving average. I think that's crazy, to say the least. And look at this, our indicators, RSI is overbought, MACD overbought, and actually rolling over here, so showing some divergence from what the stocks above the 50-day moving average is doing. The VIX at the lower end of the range at 14. 12 to 14 is big area of support. You have to pay attention to that. McClellan Oscillator, really not reading too much, but you got to look at where the indexes are here, okay? Let's take a look at the spiders, and you see this many, many times. You could see all of the supply up here, right? Take a look at our volume profile, our volume zones, a lot of supply. But when you see that, you're coming into a downtrend line here going into the spies, and we've been up since the middle to February 12th, let's say. We caught that low. We've been gravitating up ever since, and now we're looking to pop up. I think even if we pop up, that pop is going to fail, and that should be capitulation on the longs, and then we start to roll over. Now, when we do roll over, of course, we're going to examine volume and a lot of other things, but where do we go from here? We really don't know. So I'm looking for some sort of a higher low from this low, and then start to revert back up again, and then take out the highs. Remember, guys, free money is still around. And unfortunately, that's the way the markets work. They love the free money. They don't care anything else about what's happening behind the scenes. You'd have to treat this as suspect. Janet Yellen not cutting now 4 times, only 2. To me, that's something that, and I don't get into it. I don't get into the conspiracy theorist. But you have to realize there's something brewing out there that they see that they're not saying, and that's why they don't want to raise any more rates than they have to. So that's, to me, that's a big warning sign. But again, we're traders. We follow what we see. And you know, yesterday, I really didn't like the fact that the markets rallied back off the lows. And it wasn't anything to do with just what happened, that horrific incident in Brussels. Just that, you know, the markets are not realistic is what I'm saying. They like to just continue to run up and then run down and smash down and hurt everybody and then run them right back up again. And when you're up this many days of trading, okay, and you're up 6 full weeks of trading, that to me is, I have to use caution. Without any pullback, that's crazy. And we've seen it many times in the last since the 2009 lows. We've seen it continuously happening straight up, and that's why fading any type of move up and or down is just detrimental to your trading account. So let's take a look at the 60-minute, and I wanted to show you. If you remember, I had a 60-minute spider, and I had the spies. I had bearish rising wedge, and I'm going to just show that to you on a different marker. We had it right here. You could see that clearly identifiable. But we broke out of to the upside. Okay, we did break down a little bit. All right, it did trigger, but if you took it, you'd get stopped out. But what happened? All it is now is just basically an uptrend channel. So that big bearish rising wedge didn't really materialize, and now we're into this uptrend channel. What's happening in price? We have negative divergence forming as price is moving higher. So you need to use caution on that, okay? Very important. You can see our MACD and RSI lower, all right? This is another thing why you need to be cautious here. Not saying that we're going to sell off hard, not selling anything like that. All I'm saying is that a pullback is likely, and it is in the near term, and I would suspect it would be anytime today or tomorrow. And that's what I'm going to be looking for. And I'm also going to be keeping the share size light going into the rest of the week, today and tomorrow, because no need to be a hero. Let's get through the weekend, and then next week we'll see what happens going into a full trading week, and of course the end of the month as well. Okay. Here's the transports, did quite well. As you can see, we bounced back up. We took out that long-term downtrend line. Now we're back testing. This is the do or die area where it needs to hold here, right? If this does not hold, then we're going to go right back down again, probably test that 200-day and look for some sort of an interim low, maybe here, and then start to move back up again. All right, that's what I'm looking for down the road. I also wanted to talk briefly about gold. And I mentioned it many times. Watch the GDX. GDX is going to be a good short. Tough trader though, but GDX is going to be a good short if you wanted to buy some and hold. But the retailer come in and just keep buying and buying and buying until once something cracks, then it's too late. Then you can't even get out of the trade. So I like gold short in the short term, but I do think gold gets down to about 11 and a half, 1150. 1150ish, 11 to 1150, and then I think you start nibbling into buying gold, and I think that'll mark some sort of a low, and then we start to move higher yet again. Okay, and if you wanted to trade a GDX, you can do that as well. But remember, GDX is up because all of these lower end, lower quality companies that have no balance sheet have been rallying on this rally as well as the Russell 2000. So you just have to use caution. Be very cautious when you're looking to play something. If you're going to buy gold, honestly, I would like to see you buy the GLD or the gold contract, okay, or the bullion itself. I would rather you stay away from the GDX because, yes, they're miners and they do benefit when gold goes higher, but they have lots and lots of problems since gold has been really going down for the last couple of years. So just use caution. Make sure you know what you're trading is really what I'm trying to get at. Russell, IWM ETF, you can see here, still quite below the 200-day moving average. Again, not showing signs of strength like the other indexes are. This is our secondary leader, and it's not leading. Okay, yes, it is moving higher, but it's not leading like the transports are, right? Like I just showed you. Diamonds, it's our lagger, but it is leading its way higher. And again, I don't like to see laggers lead, okay, if you will. And this is the diamonds here. So just a word of caution here. I do think that we're pretty much ready and ripe for a nice little pullback here. Lastly is the Qs. We did have one of our partners here mentioned, speaking of dark pools, lots of large prints in Google L, and a little bit of Apple. Keep an eye on that. When that usually happens, there's going to be a bigger move than expected, okay? Yesterday, large dark pool prints at the end of the day, so you want to keep an eye on that as well. And also, if you want to come into the trading room, our dark pool internals, our dark pool trading room, come in, join us. Have a free trial, guys. Go to the website, www.tradingmarkettechnicals.com. Have a look. Have a great day, guys, and we'll talk to you tomorrow. Take care.